Hey everybody, I'm going to discuss the stock market, and what I want to say, there's always the yin and the yang. These situations where you have sell-offs create opportunities, yet at the same time you need to be defensive. And now's really a time to be defensive and have a trading plan, a well thought out trading plan. It doesn't have to be complicated, because complicated doesn't really hold up in the real world. I mean, where we're at right now is the Nasdaq is taking out some critical support levels. To me, one of those support levels that a lot of institutions look at are the 50-period either exponential or just 50-period moving average. So we're below that. And it's the 50 can go to the 200 and things can get worse. We don't know. I mean, it's just unknown. But the last time this happened was in September 9th of last year. And the other little, let's say, thing that stands out, not little, but the volume was also very heavy yesterday. So what that means is that institutions were selling as well. And many of the leading stocks, what does that mean? The strongest stocks fundamentally with earnings. I'll give you an example, like NVIDIA. I was in NVIDIA, had great earnings and all this, and the stock fell out of bed. And it took a 7% loss. And that's really about part of having the plan. I can't reiterate enough is having a plan. That's a combination of fundamental, identifying the strongest stocks, strongest sectors when the market is healthy. Because right now the market is a little bit iffy and you have to take it day by day. And where we are right now is it's impossible to know where we are. We can have a massive sell-off. We can, revert and start going back up again, but you have to take it day by day. I mean, the problem is, or the reality is, we have rising interest rates, which we haven't seen, and it's not just they're rising, they're going very exponentially vertical. A lot of CTAs, which are commodity trading advisors, are looking for increased inflation. Up until this morning, or yesterday, I could say better, that many of the leading commodities that were trending upwards, which were cotton, corn, bean oil, coffee, they're getting hit because people are doing, like there's a forced liquidation to some degree. But even with, let's say, the yin and the yang. So I gave you I'm not sure which is the negative part of the yin and the yang, but the point is, it's time to be defensive. However, periods like this create opportunities because the market isn't going to just go down forever. There's going to be a rebound. There are going to be companies that are making money. And fundamentally, those are the ones you identify. You identify them by relative strength and their profitability. It's almost like a ball trying to go under the water. You push a ball down underwater, like when you're in a pool, it bounces back up. So, I mean, you look at the relative strength of stocks in times like this, and you want to identify the strongest stocks because those will eventually be the next coming leaders. So now it's not a time to back off and just walk away or something like that from the stock market. It's build your watch list. Stocks that are profitable, stocks that are doing interesting, like, for example, Etsy. I mean, their business is growing leaps and bounds. And even Zoom. I mean, Zoom became almost like the word Xerox. You're going to make a Zoom call, which I have one later. You watch it. I'm watching Zoom. I'm watching TDD, which is Trade Desk. I mean, the world is going to go on. There are going to be some bad times, but the markets are going to rebound at some point. There's just doubt, and that's why you have to have a trading plan. So hope this helps you, and hope you like my channel, and then subscribe to me. Thank you. Appreciate it.